Good morning, investors. You are now on KleverStock with me, Anunjaria, serving you the latest morning bell updates. Kicking it off with the opening bell updates on our local market. Bursa Malaysia opened marginally higher today, recouping yesterday's losses in line with gains from Wall Street overnight. At 9:10 a.m., the FPM KLCI inched up 0.36 points or 0.02% to 1,621.91. Marginally up from Wednesday's close of 1,621.55. The benchmark had opened 0.06 of a point lower at 1,621.49. The market breadth was positive, with gainers thumping decliners to 199 to 133, with 273 counters unchanged, 2,048 untraded, and 8 suspended. Turnover stood at 181.89 million shares worth 74.25 million ringgit. Rakuten Trades in neighborhood Vice President of Equity Research Tong Pat Leng said Wall Street rebounded overnight amid legality issues surrounding President Donald's sweeping tariffs, now under scrutiny by the United States U.S. Supreme Court. He said traders are also cautious about the lofty valuations of artificial intelligence AI-related stocks. There are also uncertainties about whether the U.S. Federal Reserve will cut rates next month. He said back home there has been a flurry of activities within the small cap space following a few high-profile share price declines of late. Therefore, we expect the FPM KLCI to trend within the 1,620 to 1,630 range. Among heavyweights, Maybank and IHH Healthcare gained 2 cents each to 9 ringgit and 94 cent and 8 ringgit and 30 cent respectively. Tenaga Nasional added 8 cents to 13 ringgit and 28 cents. Republic Bank slipped 5 cents to 4 ringgit and 29 cent, and CIMB Group fell 2 cents to 7 ringgit and 48 cents. On the most active list, Borneo Oil remained unchanged at half a cent. MMAG eased half a cent to 10 cents. NextG dropped 1 cent to 29 cent. VS Industry inched down 1.5 cent to 45 cent, while Dagang Exchange advanced half a cent to 32 cents. Besides Tenaga Nasional, other top gainers included Petronas Gas up 14 cent to 18 ringgit and 84 cent. VTrox 10 cents higher at 4 ringgit and 61 cent. Hong Leong Bank edged up 6 cents to 21 ringgit and 2 cents, and Sunway rose 5 cents to 5 ringgit and 44 cent. Top losers included Nestle, which tumbled 2 ringgit and 80 cents to 113 ringgit and 20 cent. Malaysian Pacific Industries fell 32 cents to 30 ringgit and 12 cent. Time.com slipped 18 cents to 4 ringgit and 87 cent. Petronas Chemicals, then United Plantation erased 6 cents each to 3 ringgit and 69 cents and 25 ringgit and 40 cents respectively. Moving on to local currency updates. The ringgit continues to strengthen against US dollar this morning after closing 0.14% higher at yesterday's close, with all eyes on Bank Negara Malaysia's Monetary Policy Committee's decision on the overnight policy rate OPR later today. At 8 a.m., the ringgit was 4.1865 or 4.1985 compared with Wednesday's close of 4.1890 or 4.1925. Bank Muamalat at Malaysia Berhad economist Dr. Muhammad Nizam Abdul Rashid said the bank foresees the OPR to be maintained at 2.75% in light of the resilient Malaysian economy as reflected in the third quarter gross domestic product GDP, which came in at 5.2%. He said as such, the US dollar ringgit pair is expected to linger around 4 ringgit and 19 cents level today. Muhammad Nizam said local market sentiment remains supportive despite the US dollar index DXY staying at around 100 points amid improving business sentiment in the service sector as well as rising job creation in the private sector. He said the United States economic indicators posted encouraging figures. Nevertheless, issues surrounding the government shutdown and tariffs are weighing on business sentiment as government service delivery are being interrupted, along with increasing business costs due to higher import tariffs. At the opening, the ringgit traded slightly easier against the major currencies except against Japanese yen. It was marginally lower against the British pound at 5.4642 or 5.4799. easier versus the euro at 4.8124 or 4.8262, but was up against the yen at 2.7116 or 2.7245. The local note also traded higher against ASEAN currencies. It strengthened further against Singapore dollar to 3.2039 or 3.2133 and rose against the Philippine peso 7.11 or 7.14. It fell vis-a-vis Thai baht to 12.8776 or 12.9244. It was flat against the Indonesian rupiah at 250.4 or 251.2. Continuing with economic updates, Malaysia's economic growth continues to remain resilient this year against the backdrop of external volatility and uncertainties related to the United States trade policy, according to S&P Global Ratings (S&P). Its senior economist for Asia Pacific (APAC), Vishrut Rana, highlighted that the key factors behind the resilience were support from the external sector, with the strong performance of the global technology industry, driven by strong artificial intelligence (AI) demand and data center investment. He said as a result, a lot of the APAC economies that are part of the technology supply chain have done particularly well. Malaysia is a key part of the electronic supply chain in the region, and as a result, the economy has been doing relatively well. According to Rana, the Malaysian economy is highly externally oriented, with 35% of value added arising from external demand, adding that steady external conditions will be key for the outlook this year. And meanwhile, he believes that Bank Negara Malaysia (BNM) will likely be cautious in easing the monetary policy given the uptick in inflation for specific sectors, particularly personal care, restaurants and financial services. He added, if the inflation continues to peak higher, particularly if there is a change in the food prices component, then we are likely to see a shift towards a slightly tighter monetary policy settings, although moves in any direction are likely to be marginal. Overall, inflation has been relatively contained on the core side. We do not expect significant pressure, but in these subcomponents, we might see some higher inflation in the coming months, which is likely to put some pressure on prices while remaining relatively contained. In the meantime, Rana commended the 2026 budget initiatives, noting that it remained supportive and continued to focus on industrial policy, moving up the value chain and aiming to deliver gains for the small and medium enterprises (SMEs) in line with the new Industrial Master Plan 2030. He added it remains to be seen how successful those policies are, but in terms of the policy direction, we have some clarity. It is going to be manufacturing led with an emphasis on some of the new technologies, and Malaysia is looking to leverage its existing position in the tech space for that. Moving on to corporate news update. Petroleum Nasional Berhad, also known as Petronas, has signed a 20-year deal with Canada's Pembina Pipeline Corp for 1 million tonnes per annum (MTPA) of liquefaction capacity at the Cedar Liquefied Natural Gas (LNG) facility through their respective subsidiaries. Petronas said this will see Pembina supplying transportation and liquefaction services to Petronas LNG Ltd under a synthetic liquefaction service structure. The project, valued at $4 billion, is progressing as scheduled and within budget, with operations expected to begin in late 2028. The National Oil and Gas Company said the deal provides it with an additional natural gas export channel for its substantial upstream assets in Canada, while giving Pembina a steady long-term take-or-pay revenue stream with room for value growth. It said the agreement also demonstrates the shared commitment of both Pembina and Petronas to realize the long-term potential of Canadian energy, supporting energy security and advancing the transition to cleaner fuels in Asia. Petronas Gas and Maritime Business Vice President for LNG Marketing and Trading, Samsairi M. Ibrahim, said the milestone underscores the group's enduring commitment to its Canadian investments and its ongoing efforts to strengthen its global LNG support portfolio. He said this arrangement improves supply diversity and enhances reliability of supply for customers, while reinforcing our steadfast commitment to deliver reliable, lower carbon energy solutions to meet Asia's growing energy needs. Pembina Senior Vice President and Corporate Development Officer Stu Taylor said the deal builds on the company's existing partnerships with Petronas and supports its export business expansion. He said the agreement reaffirms the value of the Cedar LNG project and reflects strong global demand for Canadian West Coast LNG, which benefits from competitive feedstock prices and shorter shipping routes to Asia. Pembina had earlier signed a 20-year take-or-pay agreement for 1.5 MTPA of LNG to support the final investment decision for Cedar LNG project in June 2024. The new deal with Petronas marks the first step in Pembina's efforts to remarket that capacity, with the remaining 0.5 MTPA expected to be finalized by the end of 2025. And finally, wrapping up, we have major corporate developments and deals across Malaysia. Kerjaya Prospect Group Berhad has secured an 87.66 million ringgit contract to undertake building works for a commercial development project in Shah Alam. Pimpinan Ihsan Berhad said its proposed regularization plan involving its acquisition of renewable energy group Renikola Holdings Indonesia Berhad is currently under the attention and review of the Ministry of Energy Transition and Water Transformation before the ministry provides its official feedback. AWC Berhad said an arbitrator has ruled in the Engineering Services Group's favour in a dispute over an unpaid sum of the supply of materials. Speedhawk Berhad has obtained shareholders' approval to diversify into expanded EPCC segment, marking a strategic move to extend its engineering and project delivery expertise beyond the oil and gas sector. And last but not least, Kacha Digital Berhad has successfully completed its renounceable rights issues, marking an oversubscription of 78.25% and raising 24.33 billion ringgit in gross proceeds. Now that's a wrap of Morning Bell updates with me, Anujara, on KleverStock. Thank you for choosing us, investors. Stay tuned for the next live coming soon.